question 5, sub question 6. Raj Kumar Limited had purchased some machines for rupees 82,000 on 1/4/12. Money? What is that? What I read, what is that? Once I start reading, complete attention on that. Nothing else in between. Keep studying. So, Karan, what is that? Sabdani? Purchase price. Both of you keep studying. Rajkumar Limited had purchased some machines for 82,000 on 1/4/12. So 82,000 is the purchase price. The installation expense of this machine was rupees 8,000. So cost will be 82 plus 8, 90,000. Now on 1/10/14, company purchased another machines for rupees 70,000. Again, what is 70,000 money? Purchase price. So now, and their installation expenses was 2,000. So Karan, what is the cost? 70,000 plus 2,000, 72,000. Now company provides depreciation at the rate of underline 10% every year under straight line method. So now straight line method means you count depreciation on cost price every year. Now, and 30% machines from first purchase were sold. Entire machine 1 is not sold. Even out of machine 1, only 30% are sold at 20% profit book value on 31/3/15. That's why the question is very important. But that's a simple point. At the time of sale only we have to divide it in two parts. 30% is sold, so 70% will remain unsold. We'll divide it in two parts. From the above information, prepare machines account up to 31/3/15. So for 3 years we are asked machine account. Journal is not asked, so we'll be using the shortcut. As well as show accounting effects in annual accounts of each year. Other than machinery account, we are asked final accounts of all the 3 years. Is everyone clear with it? As well as show accounting effect in annual accounts of each year. Annual accounts means final accounts. So effect in final accounts are asked each year means all the 3 years. Anyone having any confusion in it? So first we will make the workings. Working note 1. Machine 1 slightly more space because later on we are to divide it in two parts, 30% and 70%. And machine 2. Okay. Now we'll read from the beginning and we'll start making the workings again. Each date will be compared with year ending, that is 31st March. And whichever takes place first will be recorded. What do we do on 31st March? Provide depreciation. Okay. Rajkumar Limited had purchased some machines for rupees 82,000 on 1/4/12. One more thing, if you have copied the homework, it will be very easily known because in the textbook workings are not there. So whenever you are doing the homework, see that you are not copying it because I will require the workings. I have given the instruction. Those who are not done will be reported and will be getting severe imposition for that. So when you are doing the homeworks, the illustrations are not to be straight away copied. I know you people are not ultra genius, indie genius that you can directly make those ledger accounts as given in the textbook. Without these workings, you will not be able to do. Otherwise, you will explain me how did you get that. Rajkumar Limited had purchased some machines for 82,000 on 1/4/12. So, Fatima, how will we start? 1/4/2012. First of all, purchase in machine 1 column 82,000. Yes, further?
Plus expenses.
So plus expense of 8,000. So 90,000 will be the cost. Is everyone clear with it? On 1/10/14, company purchased another machine for 70,000 and the installation expense was 2,000. Underline 1/10/14. Okay, what next?
Depreciation.
Date.
31st 3.
Correct. 1/4/12 ends on which date? 31/3/13. Does 31/3/13 take place first or the next date 1/10/14 occur first? 31/3/13. 2013 will come before 2014. So on 31/3/13 we will provide
10%.
depreciation. Yes, for the amount.
9,000.
Yes, can you all see 10% straight line method is given? So 90,000's 10%. What depreciation we will provide? 9,000. And 81,000 will be the book value on 1/4/13. Sit down. Is everyone clear up till here? Raise your hand who is not clear up till here. Raise your hand who is still writing up till here. Okay, simply you have to follow the chronological order of dates. Anyone still writing up till here? Harshita, next.
Sir, on 31/3/14 we provide depreciation because it comes first, then 1/10/14.
Ayushi?
Sir, 1/10/14 will come first.
No, Harshita is correct. Be attentive everyone. 1/4/13 will end on which date? 31/3/14. Will 31st March 2014 come first or 1st October 2014? March will come before October. It's not 1/10/13, it is 1/10/14. So again on 31/3/14 we will provide depreciation. Yes, Harshita, what amount?
9,000.
Yes, depreciation in straight line method will remain same every year. So again 9,000. Here also we calculated for one full year. Here again we are calculating for one full year. Is everyone clear with this? 81 minus 9, 72,000 will be its book value on 1/4/14. Anyone having any doubt in this? Then Zahir,
minus depreciation.
date
31/3/15.
minus depreciation. Santani,
On 1/10/14 another machine is purchased.
which date will come first now? 1/10/14. When does 1/4/14 year end? 31/3/15. Does 31st March 2015 come first or 1st October 2014? 1st October 2014 will come before 2015. So now we should record 1/10/14. Yes, Santani?
Purchase 70,000 in machine 2
Purchase of 70,000 in machine 2
and plus expenses 2,000.
plus expenses 2,000.
72,000 cost.
So 72,000 will be its cost. Sit down to the view. Is everyone clear with this? Now further we need it. Company provides depreciation 10% every year under straight line method. Now 30% machines purchased from first machines were sold at 20% profit of book value on 31/3/15. Now listen everyone. When does this 1/4/14 end? 31/3/15. And in the transaction also under 31/3/15. When is this machine sold? 31/3/15. So do both the things take place on the same date or not?
Yes.
So date will come 31/3/15 itself. Okay. 31/3/15. But be careful. Even before selling the asset you provide depreciation, and even at the end of the year you provide depreciation. But up till now when the asset was sold, we used to count depreciation only on the asset which was sold. Now you count on both because it is also the year end. Okay, so even the depreciation on assets which is not sold will be calculated because the date of sale is 31/3/15 itself. Suppose the date was 1/1/15, then we would count depreciation only on the asset which is sold. But here because the date is 31/3/15, we will will count depreciation on both the assets, which is sold as well as unsold. Anyone having any confusion in this? All are clear with it? So 31,315 minus depreciation and on both the assets, because the date of sale is also same and year ending is also same. Akash?
In first machine minus 9,000, 63,000 is book value on 1/4/15, and in second machine we have used it for 6 months, so 72,000 into 10% into 6 divided by 12, 3,600.
Correct. Very good, dear reader. First machine 72,000 is on 1/4/14. So 1/4/14 to 31,315 we have to count depreciation for
1 year.
full year. But second machine is purchased on 1/10/14. So October to March we will count depreciation for only 6 months. October, November, December, January, February, March. Okay. Here full year, so this amount will again come same straight line method, but here the amount will be 72,000 into 10% into 6 months, so 6 divided by 12, 3,600. Are you all able to understand this? So 72 minus 9, 63,000, and 72,000 minus 3,600, 68,400 will be the book value. Now this machine you have to divide in two parts, because entire machine 1 is not sold. Read the last sentence and circle 30% machines, circle that. How many machines are sold? Only 30%. So we'll divide this in two parts, 30% and 70%. What is sold is not entire machine 1 but only 30%. So we'll divide this in two parts, 30% and 70%. 63,000's 30% is 18,900 and 70% is 44,100. Now this 18,900, 30% machine is sold at 20% profit. So we will add 20% profit. 18,900 into 20% is 3,780. We'll add profit of 3,780. So 22,680 is the selling price. Did everyone understand this? Why did we divide it in two parts, 30% and 70%? Because only 30% of first machines are sold. So we divided this amount in two parts, 30% and 70%. 63,000's 30%, 18,900 and 63,000's 70%, 44,100. Now this 30% machines are sold at 20% profit. So 18,900 into 20% profit, 3,780. And 18,900 plus 3,780 profit, so we'll add it. So what is the selling price? 22,680. Now the story of this 30% machines is over. What remains with us? This 70% machine and this. So our answer in machinery account at the end should come 68 plus 44, 1,12,500. This should be our final answer in the machinery's ledger account. Whatever machine remains unsold will remain in our closing balance. So this 44,100 plus that 68,400. Finally, we will have balance of 1,12,500. Anyone having any doubt in this? All are clear with this? So now we'll make that machinery account for 3 years. Make the format. Ledger of Rajkumar Limited. So everything in this chapter depends on workings. If your workings are correct, rest of the things are very simple. Just a little bit careful you have to be in making the workings. Make the format. Who are still making it? 30 more seconds. Do it fast. So what is the shortcut to be followed? KP. What is that KP? Purchase profit will come on debit side. Everything else will come on credit side. Ten, 9, 8, 7, 6, 5, 4, 3, 2, 1. Mohit, how will we start? And date? Correct. Dear everyone, 1/4/12 purchase will come on the debit side. So date is 1/4/12. To bank account 82,000 and to cash account 8,000. Is everyone clear with this? So we have recorded the date of 1/4/12. Anyone having any doubt in this? Then Kajal next.
Depreciation. By depreciation on credit side.
Correct. An amount?
No, 81,000.
9,000. Depreciation is amount. So now 31,313 depreciation will come on credit side. 31,313 by depreciation account. And amount is 9,000. Did you all understand this? Then number after that? Yes, after 31st March depreciation you'll do balancing. How will you do?
So 90,000.
82,000 plus 8,000, 90,000 on both the sides.
So balance brought down 9,000. Sorry, carried down 81,000.
90,000 minus 9,000, 81,000 date. 31,313 itself by balance carried down. So now, is everyone clear up till here? Then, Neil, what next?
The 1,413 by balance brought down.
Two balance brought down. Opposite side 1,430, two balance brought down 81,000, and this should match with book value in the workings. What is the book value on 1,413? 81,000. Any confusion up till here? Riya, what next?
31,314 depreciation by depreciation account 9,000.
Yes, now again on 31,314 depreciation of 9,000 will come on the credit side. 31,314 by depreciation account, and amount is 9,000. Then what next?
Balance
Again after 31st March depreciation balancing
81,000.
81,000 on both the sides.
And 31,314 by balance carried down 17,000.
31,314 by balance carried down 81,000 minus 9,000, so amount will be 72,000. Is everyone clear with this? Then Abhinav, what next? First opposite side
1,414 balance brought down.
1,414, two balance brought down 72,000. Yes, what next? Now see the workings and tell me. This should match with the book value, although we can see 1,414, the book value is 72,000. In the workings after 1414, do we have 31315? So why 31315? I told you from the workings we are making the ledger. What do you do with this 11014? You write the shortcut 100 times by tomorrow. Isha,
11014 by bank account.
credit side or debit side?
Bank.
So two bank accounts.
Bank account 70,000 and to cash account 2,000.
Yes. Abhinav, repeat. PP, purchase and profit, debit side. Repeat it. Now repeat this 100 times by tomorrow. Purchase will come on the debit side. For bigger amount to bank account, for smaller amount to cash account. Okay? How are you doing the homework? Copying it. So now, 11014 to bank account 70,000 and to cash account 2,000. Same date. Who is talking in between? Is everyone clear with this 11014? Then Sheetal.
Sir, by depreciation 9,000.
31315 by depreciation only 9,000.
9,000 and 3,600.
So what amount?
Sir, 1,600.
Yes, you done the homework on your own, not copied it. So now, 31,315, the depreciation now will be 9,000 plus 3,600. Total depreciation of 12,600 on credit side, 31,315 by depreciation account. In bracket, you will show that. It's what happened. Why are you talking in between? Kanisha and Sharma. 9,000 plus 3,600, 12,600. Is everyone clear with this? Then after that, we will, after this depreciation, what next? Yes, after this book value will have no entry. In profit and selling price, which one will you record first? Selling price will always come first. So purchase and profit debit side, selling price will come on credit side. 31,315 by bank account. Yes, what amount, Digvijay? 22,680. So now, is everyone clear with this? And after that, Kanisha? Yes, profit will come on which side? Debit side. PP, purchase and profit on debit side. So again on debit side, 31,315 to profit and loss account, in bracket profit, and amount is 3780. Did you understand this? Now again we'll do the balancing. So 70, 140, 147, 780 and 147, 780 minus 35,280. So 112,500. 31,315 by balance. Carried down. Opposite side 1,415 to balance. Brought down. 112,500. This should match with book value. I told you what should be the answer at the end. 112,500 because these two machines remain unsold. So everyone is clear with this? Now effect in final accounts. So one P&L and balance sheet, again second P&L and balance sheet, again third P&L and balance sheet. For all the 3 years we will show, and each of them 2 lines. Okay, make it fast. Effect in final accounts. 10, 9, 8, 7, 6, 5, 4, 3, 2, 1. Now be attentive everyone. First 2 years is simple. Third year's effect is important in this question, so understand it properly, okay? In the first year, Vidya, will we show the things?
Depreciation 9,000. And in balance sheet to machine 90,000 minus depreciation 9,000.
Correct, be attentive. In the first year, the depreciation amount is 9,000. So directly in P&L account debit side, the depreciation amount of 9,000 to depreciation 9,000. Now regarding the asset side, remember it this way, more easier. In that year, whatever comes in debit side, you add it, credit side, you minus it. And your closing balance should come in outer column. Debit side, add it, credit side, minus. Closing balance should come in outer column. So debit side machine of 90,000 is purchased, minus credit side 9,000 of depreciation. So outer column 81,000. Any doubts in this? With second year?
To depreciation 9,000, machinery 81,000 minus depreciation 9,000.
Correct. So now in second year, what is the amount of depreciation? 9,000. So profit and loss account debit side 2, depreciation 9,000, and asset side, as I said, debit minus credit. So debit machinery you will show 81,000 minus depreciation you will show 9,000. In outer column you will get 72,000. You will do debit minus credit. So machinery 81,000 minus depreciation 9,000. So outer column 72,000. Is everyone able to understand it?
Yes.
Now third year, be attentive. Third year, if you see the depreciation amount is 9,000 plus 3,600, 12,600 total depreciation. So in profit and loss account 2, depreciation, but amount will be 12,600. And as I told you, debit you will add and credit you will minus. Means how will you show in the asset side? Put your bills now. First of all, machinery of 72,000. That you consider, plus purchase of 72,000. 70 and 2, the cost is 72. So already there is a machine of 72,000 plus purchase of 72, that is 1,44,000. Okay. Purchase we will add, then this machine which is sold we have to minus. But we will not minus 22680, we will minus its book value 18,900. We will directly minus the book value of machine sold which is 18,900. So instead of adding 3780 and subtracting 22680, we'll straight away subtract 18900. There is a difference. You can see 22680 minus 3780, the difference is 18,900. And we will minus depreciation of 12,600. Once again, machinery we will show plus purchase 70 minus sold. We will not subtract 22680, we will minus book value of 18,900 and will minus the depreciation of 12,600. You will get 112,500. So asset side machinery, first balance of 72,000 plus purchases 72,000 So 1,44,000 minus sold in bracket BV. What is the book value of the asset which is sold? 18,900. Remaining 25,100 minus depreciation. Now depreciation is 12,600. So outer column 112,500. Okay, mark this effects important. Last year is important. So you'll start with the machinery's balance, then you'll add. After starting with the balance, you will add purchase. Then you'll minus sold. But when you subtract the sold, you'll minus the book value of the asset which is sold, that is 18,900. And then you'll minus the depreciation of 12,600. So you'll get 112,500. Okay, last year's effects and final accounts are important. Did you understand this? Now, look at question number 8. 7 was done lastly. Look at question number 8. Complete it first. Raise your hand who is still writing this balance sheet. Everyone has completed? Now look at question number 8. Be attentive everyone. Machinery account shows a balance of 60,000 in the books of Betul and Company on 1/4/14. Underline balance. What does that mean? Book value. So before finding the depreciation, what will we need? No, will not need it. We need the cost price if it is straight line method. If it is reducing balance method, then in reducing balance method you count depreciation on book value. So cost price is not needed. So this balance word is important when it comes under straight line method. Then we have to first find the cost, because we cannot calculate depreciation on book value. But here it is reducing balance method, so balance has no relevance. Company provides depreciation at 10% every year, underline under reducing balance method. That's the reason we don't need to find cost price. This machine was sold at 25% loss on book value on 1/10/14. From the above information, pass necessary journal entries and prepare machinery account in the books of the company. It's a very small question, 1 year only. 1/4/14 the book value is given, and we have to do it up till 1/10/14. But entries will be important here, slightly different than question 2. Question 2 was similar one under straight line method, but because of the date in entries, what will be the difference that I explained. So write down workings first. One 4/14 book value is 60,000. On which date it is sold? 1/10/14. So before selling it, how many months depreciation? 6 months. Which 6 months? April, May, June, July, August, September. 6 months. 1st October it is sold, so October we are not using it. April to September, 6 months. Any doubt in this? Minus depreciation. Now this is what I told, here we don't need the cost price because it is which method? Reducing. So directly you can do 60,000 into, what is the rate of depreciation? 10%. Maximum times it is 10%, but not always. We have done few questions with 5% also, 8% also. In exams, read it carefully. Without reading directly, don't assume 10% and start solving it. Okay? Into 6/12, 3,000. So before selling, its book value will be 57,000. Now it is given that it is sold at 25%. It is sold at 25% loss. So what will we do with the loss? Minus 57,000 into 25% loss. 14250. So 42750 will be its selling price. Did everyone understand this? So very small working, only for 1 year we have to pass the journal entries. So first we'll have 2 entries of depreciation. But listen carefully. Refer to the similar workings of question 2. Day before yesterday it was done. Do you find similar small workings or not? Yes. Before the working 2, first we obtained the cost price, but that was because it was straight line method. Here directly we have made the ring workings only. But one difference is there. Can you see the date of sale is 31/3/15 in question 2? 14, but that is 31st March. Can you see that? Full year depreciation was calculated. Now here, because the date is 1/10/14, listen carefully. Depreciation we will provide on 1/10/14. Depreciation to machinery. What is one more entry we pass? Profit and loss to depreciation. That you cannot do on 1/10/14. When do you make final accounts? At the end of the year. So that second entry will come on 31st March 2015. Because depreciation can be transferred to P&L account only when we make final accounts at the end of the year. Did you understand this? So on 1/10/14 we will pass only one entry for depreciation. Depreciation to machinery. Same date we'll pass the other entries first. Then at the end of the year we'll transfer the depreciation to P&L. What entry will pass for the sale? Bank to machinery. We'll combine the entry of loss because this also we cannot transfer to P&L because it's in the date of 1/10/14. So we'll pass combined entry for this. Bank account debit 42,750. Loss on sale of machine account debit 14250, and to machinery account machinery of 57,000 goes out. And then at the end of the year we'll pass 2 entries. This depreciation will be transferred to P&L account and loss will also be transferred to P&L account. So that way 4 entries will come. Whereas in that question solution you can see entries are in a different order. Because the date was 31st March already, we simply first pass the 2 entries of depreciation, then we pass the entry of sale, then we pass the entry of profit or loss. That was a simple direct question. But because of this date, the order of entries changed. Is everyone clear with this? Make the format of journal. Journal entries in the books of Betul and Company. In this question, all of you mention on the right side in the question textbook, compare the journal entries with question 2. And in exams, be careful whether the date is in between the year or at the end. Because if the date is end of the year, then directly pass the 4 entries. First 2 entries of depreciation, then sale, then profit or loss. Direct concept. But here, because it's in between the year, directly you cannot pass 2 entries of depreciation. First you will pass 1 entry of depreciation, then you will combine the entry of sale and loss. Then on 31/3/15 you will transfer depreciation to P&L account and then you will transfer loss to P&L. So order of entries will change because of that. Okay. Date, particulars, LF number, debit and credit. Yes, what is going on? $30, do it fast. 31st, on 1/10/14, book value has no entry. On 1/10/14, everyone be attentive. Only one entry of depreciation will come because it is in between the year. Let down depreciation account debit 3,000 to machinery account 3,000. Being depreciation provided at the rate of 10% by RBI. Now, normally, after this, what entry do we pass? P&L to depreciation. Why we cannot pass that here? Because the date is 1/10/14 and it is transferred to P&L account only on 31st March, end of the year. So after this, we will directly pass the entry of sale and will pass combined entry for sale and loss. So put it on 1/10/14. Bank account debit with the money received 42750. Okay, bank is the receiver, debit the receiver. Loss, debit all expenses and losses. So loss on sale of machine account debit 14250. Understood this? And machinery goes out, credit what goes out to machinery account 57,000. Any doubts on this? B. Machinery sold at 25% loss. Now on 31/3/15, this depreciation will also be transferred to profit and loss account and loss will also be transferred to profit and loss account. So on 31/3/15, profit and loss account debit to depreciation account 3,000. Being depreciation account transferred to profit and loss account. Okay, and also this loss will be transferred to profit and loss. What do you do to close the loss? Reverse and credit. So profit and loss account debit to loss on sale of machine account 14,250. Okay, loss of 14,250. You'll close and credit and you'll transfer it to P&L account. So P&L account debit. Last two combined entry can also be passed. In that situation, you'll do profit and loss account debit with 17,250 to depreciation 3,000 to loss on sale of machine 1425. Do you understand this? 57, 60, 63, 77.
being बाकी है
Being loss on sale of machine. Being loss on sale of machine transferred to profit and loss account. Now, machinery account is asked. I discussed earlier also, if journal is passed, then ledger account you always make from journal entries. Put your pens down, I'll explain you, then you can continue. It's a very simple one. From the journal itself, we have to make the ledger. Yes, put your pens down here and understand it first. First of all, book value means opening balance. So on debit side, you will write 1414. To balance brought down 60,000. Any confusion in this? Now from the first journal entry to machinery, so machinery on credit side 11014 by depreciation account 3,000. From the second entry again to machinery means machinery on credit side, both the opposite accounts by bank account 42750 and by loss on sale of machinery account 14250. This last two entries will have there is no machinery in that and squared up account because the machinery is sold. Any confusion in this? Completed. So far illustration 1, 2, 3 have been done. Even 4. Only 5 is left in between. 6, 7, 8 is done. 9 is done. Illustration 10. See that your workings will be different from textbook workings, okay? 11 is given? No? 11th question have not been given so far. 12th was given. Do these many questions for tomorrow. 10, 11 and 13. But be careful with this kind of question when the date is in between and when the date is at the end. Those kind of questions also I'll give you homework later on, okay? Where both the dates are there, I'll give you simultaneously so that you understand the difference. Bye everyone.